Is it the end of the bull run? Many were wondering after the week started with major dips across crypto, and then BTC, ETH, and Sol rallied. All this despite the latest bombshell from the SEC as news broke that the Ethereum Foundation is facing questions from a state authority. We now know this is the SEC, which is looking to classify ETH as a security. What does this mean for the ETH ETF and the rest of the crypto ecosystem? Keep listening to find out. GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. We are here to make sense of an on-chain world in constant transformation. I'm Jay Bird, along with my co-host Kyle Reedhead, and we believe that ETH is a commodity and it's going to change the world.
Oh, I like that one. I definitely agree with you there, Jay. Yeah, we got lots to talk about today. Markets is a big part of it, as Jay said. We had a big dip. Honestly, I've been kind of calling a dip for the last few weeks. Not saying it was coming, but like putting it out there. Finally, we had it. Wasn't that big, though. Kind of a dip for ants, I would call it, which is what Pomp called it on, I think it was CNBC or whatever the other day. So we'll talk about what's going on the market side of things. We're going to talk a lot about ETH, not just the FUD that Jay just mentioned, but also some big things happening. One of the biggest things probably never happened on Ethereum, which we'll cover. And yes, it has to do with BlackRock. And no, it is not about an ETF. Although we will touch on some ETF stuff as well. We'll also get you up to speed on what's happened over the last week in terms of layer twos with the Duncan upgrade that we talked about last week. Meme coins, we will definitely touch on them again. Although if you were holding any over this week, you probably got really wrecked and I feel bad for you. Maybe you listened to Jay and I, maybe you didn't. And then the last thing we're going to touch on before we get into airdrops and the agree disagrees is one of Jay's biggest calls and predictions, which was Starbucks onboarding millions. Is it going away? Is it done? Did you lose your prediction already? And we're only, in March? Well, we'll talk about that as well. It's going to be a good episode.
Oh, I love it. All right, well, before we jump in, as always, please take a minute to give us a review or a comment on whatever platform you're listening to. And also, we want to know how likely you think the ETH ETF is to happen. Do you think the ETH ETF is going to happen by May 23rd? Yes or no? That's our poll question for this week. Let us know what you think in the comments on YouTube or in the poll on Spotify. Let's jump into the market watch of the last week. Kai, what's going on in Bitcoin?
Yeah, it's been a wild little week. So Bitcoin currently sits at 66,000. It topped out earlier this week at 73,000 and then went down about 15%. So on the day, we're down 2.36%. On the week, we are down 9.39%. But we did hit a dip of about 15%. So like I said, not a massive dip by any means, but a dip nonetheless. And one that was actually quite necessary, I think, for us to continue forward. So I'm pleased by the dip.
I remember you bugging me on Friday to get paid earlier so you could buy the dip. So I know you were pumped about it. Let's go to ETH. What's going on in ETH?
ETH currently sits at 34.80 at the time of this recording. It actually went down about 25%, so hit a high of almost 41, what I'm seeing here. And then currently sits at, it went down as low as 31. And it's down just 0.89% on the week, and on the day, and 13% on the week. It had a wild little ride yesterday because of some big news, which made it pump once again. So we'll talk about what that is throughout the episode.
All right, let's go over to Solana. What's going on with Sol?
Solana sitting at 184 currently, still up 13% on the week, which is wild because everything else is down. It is down 4% on the day, but Solana's just had a wild swing. It went up to $207 and then $270, and then within a day and a half, it was all the way down to about $160, and now it's back up to 184. So this thing is just a wild ride, but obviously doing quite well when you zoom out and you don't look at the daily numbers. And then Jay will finish it off with the crypto total market cap, which is currently sitting at $2.4 trillion, down almost 10% on the week and 1.69% on the day. So, Jay, let's start with a little bit of talk about Bitcoin. Then I want to talk about what I actually did for the dip on Ethereum. We'll touch on that. And then there's actually some macro news finally, which we can discuss just a little bit of. There's not much, but we'll cover that. So first of all, on this dip that was only 15% for Bitcoin, on the exchange BitMEX, I guess there was a bunch of selling on BitMEX specifically, and the Bitcoin price went down to $10,000, and someone, for whatever reason, had an old bid like a market bid at 10K and they got it. So someone bought Bitcoin 2 days ago at 10,000. And then within a second, it went back up to 65,000 or whatever it was at. So like 6x in like a second. So kudos to whoever that person is. They must be just celebrating. That was literally happens in seconds. It's not like Bitcoin actually went down that low. It's just because a bunch of shit happened on the BitMEX exchange for whatever reason. So kudos to that human or bot, whoever that was. But part of the reason why all this happened, I mean, there's a few reasons. One, I had talked for the last couple of weeks. We were definitely getting over-levered and probably overhyped. I mean, Memecoin Mania, which we'll touch on again, was just getting absolutely ridiculous. We had the fundraise for WIF to go on the Vegas sphere. These are all typically like top signals and not necessarily top of the whole cycle. So the bull run is not over, as Jay asked the question at the beginning. At least I don't think it is. But these are generally times where like, okay, we need to take a break. Everyone's getting a bit ridiculous. Even in our Discord, we had people, especially even on our team, that were like, what should I buy next? How can I 10x? Blah, blah, blah. Like, stop talking about just ETH and Sol. We need to go farther down the risk curve. And then boom, they all get wrecked. And it's like, those are signals when you need to just chill the heck out. But part of it was the over leverage, the mania. And then we actually had our first day in a long time of outflows. So GPTC and the ETFs I'm talking about, but GPTC, Grayscale, had $643 million of outflows on the, I think it was the 18th or the 17th. Yeah, the 18th. So pretty big. So we're actually negative overall on that one. I think 154 million on the negative that day. We had another negative day to follow up. So ETFs taking a bit of a breather, I guess. But of course, we might have had $643 million of outflows in the ETFs. Who came in and bought the dip? Well, bought it before the dip even happened. Michael Saylor, we talked last week, he was raising 600 million or so to buy some more Bitcoin. Well, he did it, and he bought another 9,243 Bitcoin. And interestingly, Michael Saylor buys on the same day of the ETF outflows of 643 million. Michael Saylor buys 623 million worth of Bitcoin. So all is good. Michael Saylor's here to fill the gap and save the day for all the Bitcoin holders. So thank you to MicroStrategy and Michael. He's always here to save the day for all of us. Just wild. I bet next week, do you think by next week he's going to raise again? Because it's been 3 weeks in a row now we've talked about this. You think he does it again?
For sure. I think he's got extreme conviction at this current price. He's excited about this.
But that fast? We're doing a pro report right now actually on the supply shock of Bitcoin. So we were running some numbers around the ETFs and around Michael Saylor. And he's currently buying, I think it's 250 Bitcoin per day on average over the last year. And he's actually picking up steam currently. So it's a bit wild. And so like, just for context, right now there's only 900 Bitcoin that's mined every single day. By mid-April, it'll be just 450. And so Michael Saylor on his own is almost buying about a little over half of all the Bitcoin mined every single day come April 15th. So, and then you count, the ETFs in El Salvador and everyone else that's buying. It's a little bit wild. Okay, let's talk about the dip and what happens when the dip's occurring. What can you look at? Well, sometimes, Jay, charts or lines on a chart can actually be very useful. A lot of people don't like technical analysis, and it's definitely not a perfect science. I'm not saying like you need to use it always, but interestingly, up on the screen here, I have the chart of ETH, and I've shared this one in our pro Discord a few times. So pro members have seen this, and I actually shared this on Friday, I think, when the dip occurred, and just said, look, guys, I think we've hit the bottom. I'm buying right now, and it was the perfect bottom. And the reason I thought that was, well, I have a chart here, which basically the lines in here are resistance and support lines that go back from the good old days of the last cycle of Ethereum. So we're looking at what happened when Ethereum was at these prices, so around 3,000 and 4,000 and 5,000, and the last cycle. Where did it have sort of some resistance and support? And so I drew some lines here at the sort of top line, which would be some resistance at about 4,000, okay? And then we also had some, this was weeks ago, at 3,100 or 3,200, I guess it is, and 3,400. And so interestingly, as we passed 3,400 a couple weeks ago, we actually had a quick dip. If you remember a couple weeks ago, it was really fast. It was within a couple days, and it touched that 3,200 mark right where that line was. And then it shot back up. It rocketed all the way up to that 4,000 mark that I have lined on there. Then that signaled the top, came all the way down. Where did it hit again? That 3,150, 3,200 mark, which to me, I was like, and it did go past it just a little bit, but super brief and super quick. And again, just shot up from there. And now we're back up to like 3,500. So, and I mean, you could just watch it happen. I shared it on Friday. I said, guys, we just touched the bottom. I think we're going to jump from here. And boom, we exactly did that. So interestingly, As it was about halfway down from this dip, that's when payday was, and Jay shot me over some money. I put it onto my Quest trade because I'm not buying on-chain ETH at the moment. I'm buying in a tax-free savings account, and I was ready to buy, and so was my girlfriend. I said, you know what? Let's wait. I got a feeling it's going to hit the bottom of this line here, and so we waited 2 days, hit it. We got up in the morning, we bought it, and she and I both basically bought the low on this one. It was a beautiful. We were celebrating, and it was nice. This is like her first time ever buying the dip, so she was excited. She also bought some coins, so that was nice too. But yeah, nice celebratory day. Jay, any question on that before I move on to the last piece of news here?
No, I'm feeling the good vibes. I did the exact same thing. I didn't hit the exact dip, but I came very close.
Nice work. And also the last one in the
go ahead, keep going. Yeah.
So one of the reasons why we jumped back so heavy yesterday was because the FOMC meeting came out. This is the meeting that we have on a basically monthly basis where Jerome Powell and the boys tell us what they're going to do with the money. Is it going to be expensive money? Is it going to be cheap money? Is it going to cost a lot for my mortgage or not? They're going to decide basically our life. And just to kind of, I guess, short summary here, interest rates staying the same. They're not cutting. They still want to wait for 2% inflation, which we're currently around like 3% or so. So they're still sort of waiting for that. But what they did announce is they basically confirmed that they will be cutting this year, likely cutting 3 times this year. And they're planning to start slowing down quantitative tightening. So that means lowering interest rates and likely printing more money. So this was like overall pretty bullish. There was no changes. Like obviously once they lower interest rates, that's what we want to hear. But based off like the way unemployment is going and things, it looks like they're going to have to stop tightening as what he said. Just the date we don't yet know. But so basically what happened was people took this as very bullish. It's a good outlook for the rest of the year. And so as soon as this meeting was done, it ended the bear market we just had or the dip we just had in crypto. And we went nuts. I think Ethereum went up like 10% right after this, Solana 10%, Bitcoin was like 9% in the day. It was a beast of a day on everything, tech stocks as well. So that's sort of where we're sitting right now, but continue to just be stuck at, I think it's 5.5% interest rates, but likely going to go down in the near future.
All good news on the market watch. Despite an early dip in this week, things rebounded quickly. Shows you we're in for volatility, folks. So get ready. This is not the first we're going to see. This will be happening many more times over the next 12 to 18 months of this bull cycle.
And it's going to become more and more frequent. But the thing is, you got to understand, for those that are new here, these dips are very, very good. They're very healthy. We cannot keep going up 10% a day like we were the other week. You have to pull back. And the pullback is because we need to shake out the weak hands. We need to get the coins and the assets into the long-term holders, right? Which, as we just said, we all buy the dips. And those that like just came in, they sell it out real quick and it gets put into long-term holders. Jay and I are not selling our crypto, right, in the next little bit. So this is what builds a foundation to take the next leg up. These dips are very good. It also washes out leverage, the like RSI, the fear and greed index, all the stuff that like shows market sentiment. They kind of get reset and it allows us to climb up to the next level of prices at a more fundamental or like stronger level, right? Mm-hmm. If you just fly from, 30,000 Bitcoin up to like 100,000, there's a good chance you're going to come all the way back down to 30,000. But if you slowly, gradually work your way up, you build support is basically what it is when I talked about those lines earlier. And you need those things to build like a healthy market structure. So these are good. Don't be scared by these. Obviously, when we get to the topish part, then you need to be worried because that's the point at which you might want to take some profits because, well, you're just going to be buying the dip for the next 2 years. But we're nowhere near that yet. So things look good.
And so long as you keep listening, we will let you know when we think you should start selling. So
yeah, I just want to add one more thing. This whole strategy of like dips are good and healthy, this makes sense for fundamentally strong assets. Your meme coins probably aren't coming back after this dip, okay? Geoboden, that one probably will actually because it's politically year. But like a bunch of the shit that came out, that stuff got wiped out and probably doesn't come back. But real assets, they will just continue to climb and climb throughout the entire cycle.
Mm-hmm, mm-hmm. Let's jump into what's going on with the Ethereum Foundation and them being investigated. Kai, bring us up to speed on all the news that actually just came out yesterday or on Wednesday, since you guys are listening to this on Friday.
Yeah, so yesterday there was some rumors that came out in the morning that the Ethereum Foundation was subpoenaed for its first time in its history, by the way. If Ethereum Foundation was subpoenaed by a state authority, but we didn't really know who, we didn't really know why. The only reason that this rumor came out was, I guess there's this warrant canary that is on their website. And when it exists on there, it means they've never been subpoenaed. And when that thing is removed, it means that they've been subpoenaed and it's never been removed before. And yesterday it was removed. And so obviously people went to Twitter and started kind of speculating on what the heck is going on here. We still don't have like clear direction on like what this is or who exactly this is. But then a couple hours later, all of a sudden it came out that the SEC was probing crypto companies and basically doing an investigation to essentially prove that Ethereum is a security, which is a bit insane at this point. Like we've gone through so much and the SEC has already approved an ETH futures ETF. So if they are right that ETH is a security, then SEC broke the law. So like, I don't even know how they're fighting this. It's very odd, but we'll dive into it. But anyway, that sort of came out yesterday as well, that they're basically launching this big campaign. And so it's a bit misleading, I would say. I don't really know where this like campaign thing kind of came from. Ultimately, all it was is that the SEC has subpoenaed a few companies in the Ethereum ecosystem since the merge, which was like 2 years ago, because they're saying now that Ethereum is proof of stake instead of proof of work, it's more likely a security than previously. But like this happened a while ago. The companies, it's already been dealt with. It's not really like a big campaign now. I think this is actually a little bit more headline news and not as much of a reality as we think, though I think there is something here. It's not all like fake or something. Just don't think it's this like big campaign like they said. So anyway, it's still sort of unfolding, the news. So we'll learn more as we go here. But there's a few really important tweets that were put out. One from Coinbase's lawyer and one from the ex-commissioner of the CFTC, which governs the commodities. So Brian Quintes first says, reminder, when the SEC allowed ETH futures ETFs to trade on its regulated security exchanges, it explicitly acknowledged the status of the underlying ETH as being a non-security and outside of its jurisdiction. Importantly, this ETF approval decision, October 2023, occurred well after Ethereum changed to proof of stake in September of 2022, meaning that to the SEC, ETH in its present state as of October 2023 was not a security. So basically he's saying like they don't have really any grounds here, and it would actually be illegal for them to do this. And technically because it's not a security, they actually don't really have any jurisdiction to say anything else because it is deemed a commodity. And so the CFTC is the one that actually has jurisdiction over this asset. So it's a weird situation going on. And then you had the Coinbase lawyer come out as well, and he just goes sigh again with the ETH misinformation as we await a decision on the ETH ETPs, which he means ETFs. Okay, let's talk about some basic facts about Ethereum. Millions of Americans hold ETH. It has been vital to crypto since its 2015 launch, and ETH is a commodity, not a security. Basically, what he's saying is the SEC has already taken this position, so it does not make sense for them to now go against this. So there must be something going on in the background here. I don't know if it's like banks lobbying or who could be lobbying here or what's going on, but the Coinbase lawyer here laid out a bunch of different court cases that have proven that ETH is not a security, or at least have plenty of evidence to support this case. So basically, a summary of all this is, don't really know exactly why or what's happening. The assumption is this is occurring right now because the ETFs are, basically they have to make a decision by May 23rd, and they can't just say no. They actually have to have a reason to deny. It's not a delay like we've seen over the last few months. It is a yes or no, and I have to give a reason or I can get sued. And so my assumption is this is the SEC trying to build a case. It just feels like they're doing this a little too late, and in a topic around security that just like no longer really is relevant or makes sense. So it doesn't seem like they're going to win this one. And the SEC has just lost. I mean, if they couldn't prove that XRP was a security, how the heck are they going to prove that Ethereum is security? So I think we're going to see a lot of volatility and a lot of wildness over the next 2 months because the SEC obviously is trying to do something. Maybe they're getting paid or there's lobbying or something in the background. We're not really sure. But thankfully, we have people like the CFTC ex-commissioner and the Coinbase lawyers who are like going to fight for this. There's speculation that Coinbase is going to sue the SEC if they don't approve this, because again, there's no reason that they don't. So we'll see what happens, but things are going to get very interesting over the next couple weeks, I think.
Ooh, baby, grab your popcorn and buckle up. We're on for a ride. Let's go. I think it's the wild stuff about this is just how you step back and you realize how much government authorities are impacted by lobbyists. And that is, I think you're spot on. That is what is happening in the background here. We'll never know will never understand why they did this because it doesn't make any real sense. It's not a fight that the SEC really needs to take. Like, why are they making this fight?
They've lost so many.
They've lost so many times. Like, and from everything, as we go into an election year in America, or sorry, we're in an election year, I should say, at the start, the election comes in the fall. If you're Gary Gensler, you're in a position where your head could roll if you're not on the right side of where this election goes. And so it would be the last time that you would want to pick a fight with the public and cause anybody to say, hey, you know what, Gary, you're not the one, you're out. It's just bizarre to me because when you look at the political side, crypto's not really a big deal to them. Like, most of the politicians are done talking about crypto. Yes, there's bigger issues to the voters. Let me put it that way. And so when you have bigger issues to the voters, you sort of say, why does the SEC keep picking this fight? I don't know.
Yeah. They had a better case in the bear market because a bunch of people lost money. So like voters would be happy that they were trying to like regulate and whatever. But now that everyone's making money, it's kind of swung the other way. And it's like, if you fight this stuff that everyone's making money on, which I think Coinbase said, there's tens of millions of Americans that hold Ethereum and hold crypto assets, right? So like these people all want this thing to go through, right? Like they're pumped about this. And so it is not a good political stance anymore. Maybe it was like, I don't know, 6 months ago, a year ago, but it is not anymore. So again, there's got to be something going on in the background. Obviously, we don't know what that is. But what's funny is it's basically Gary Gensler against who? Larry Fink and the boys over at BlackRock, because BlackRock doesn't give a shit what Gary has to say. They've got their ETF that they have launched, and they also are launching a $100 million fund on top of Ethereum. This was also announced yesterday, which is hilarious. You've got this like SEC saying that they're going after Ethereum because it's security and blah, 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 blah. And then you've got Larry Fink and the boys, the biggest institution in terms of assets under management in the entire world, that goes, oh, you want to try to go after Ethereum? Well, we're actually going to launch $100 million on top of Ethereum right now and launch a fund. And so BlackRock partnered with Securitize, which is like a fairly well like RWA company in crypto. So they partnered with them along with Coinbase, Fireblocks, Anchorage, and BitGo to launch a fund called BIDL, which is basically build, but the D and the L are switched, similar to hold, and the D and the L are switched. So that's interesting. Is BlackRock getting a little bit more degen, it seems?
And it stands for BlackRock USD Institutional Digital Liquidity Fund. Like it actually it stands for something too. It's not just a ticker, right? Like it does. They did very well in the marketing of this.
Yeah, quite impressed. It's interesting what they've done here. So basically what this is BIDL seeks to offer a stable value of $1 per token. So it's a stable coin essentially, but in the version of a fund. But what it does is it's a yield-bearing stable coin. So it pays daily accrued dividends directly to investors. And I don't know if this is completely permissionless. Anyone can buy it. That one I'm not completely clear on yet. But basically, dividends are going to auto accrue to investors' wallets. So you'll hold this on-chain, a dollar stablecoin, and like it'll just come to you. You can trade it 24/7, 365. But basically, what they're doing is they're taking the money. They put $100 million in a year in USDC, and the fund is investing it all in cash, U.S. Treasury bills, and repurchase agreements. And so basically, it's a yield-bearing stablecoin, but in the way of sort of like a fund, or instead of its yield-bearing stablecoin, it's basically a tokenized treasury, I guess is what you could call it. But regardless of what it is, it's super, super cool that BlackRock is doing this. And it's on the Ethereum L1 currently, but Coinbase is involved. And so you wonder, is the next step here to put this onto Base at some point, right? Right now, I think this is for bigger investors, so it doesn't matter if it's on the L1. Interesting fact, for them to mint the 100 million USDC, cost them $5. So like, look, I know we say Ethereum L1 costs a lot, but in terms of like comparing that to the TradFi world, that is insanely cheap. So that's pretty cool. And then one other interesting thing, and I don't know if we have the tweet up here, Jay, to show, but we have the wallet that BlackRock has used to mint their USDC. And so we can see on-chain BlackRock's wallet and what they're holding. And so they have 100 million USDC on there. And then they also have like, was it Mug Coin or something? I don't even know what coin it is.
Mog. They have Mog. They have like a whole bunch of wallets have sent meme coins to the BlackRock wallet because they want to be seen. The BlackRock wallet is holding their meme coin. So the BlackRock wallet has like over $100,000 that it's gained in free money.
Yeah. So someone was like, basically they're earning yield on their USDC just by holding it in their wallet because people are sending them like over $100,000 worth of tokens, like mainly meme coins and shit coins and whatever. But it's pretty hilarious that BlackRock is coming in and they just get thrown into the shitstorm of crypto right off the bat. It's pretty funny. But anyway, this is massive news. Don't know that anyone expected this to come, especially from BlackRock, right? Like the biggest thing I see from this is like, look, it's $100 million. It's not super massive, although it's a pretty decent amount, I would say. More, it's the signal this sends to every other financial institution in the world, which is, hey, we're the biggest, we're the best, and we're on chain. And so what do you think everyone else is going to do? Everyone is now, I mean, I'm sure many of them were already in meetings to like already do this, but everyone is now taking this real seriously because this is a really big deal. So really, really cool, exciting stuff.
One more exciting piece of news that came out of Ethereum this week was that Grayscale announced that they are looking to add staking for their proposed Ethereum ETF. This is following Fidelity actually led this, making this announcement last week. So basically, Fidelity and Grayscale are updating their ETH ETF application to add staking abilities within the ETF. Now, it does not look like this would be if you invest, like let's say I invested in Fidelity or Grayscale's ETH ETF, I wouldn't be able to do staking within that ETF. It's more that Fidelity and Grayscale, since they are going to be holding so much ETH as part of operating this ETF, they want to stake that ETH in order to gain yield and make extra money along the way. And so they are proposing to the SEC that they should be allowed to stake that ETH as part of managing and operating this ETF. Will they be allowed to do this? I don't know. It's kind of a stretch, I think. Like I could see the SEC not being down with it. But hey, look, it's showing the TradFi world what is possible with these assets. And it's funny because we talk about lobbying, sure, I'm sure there's a bunch of banks that are lobbying against the ETH ETF. But here is Fidelity, which is a massive American institution and bank and really leans towards the TradFi side, not the crypto new age tech side. And they see the benefits of ETH as a commodity to get them way more potential yield than they would get from holding a lot of other assets that they would typically use in their funds for the average American.
Here's the really cool thing. So first, I think you're right. It probably doesn't get approved at this. In part, some people were saying like, maybe they're doing this so they have some negotiation. They'll be like, the SEC struggling to approve it. They're like, well, we'll take out staking and at least give us that. You know what I mean? So they have some like negotiation parameters. But anyway, the end result one day is that maybe they can pass that yield off to the ETF holders. So like you hold an ETF and you get dividends. That would be like insane. But if you think about this, if they got approved, Fidelity and Grayscale, I think ARK also has this in their file, but I'm not 100% sure. If they got approved for this, they could charge zero fees, right? Mm-hmm. Because they make 4% over on staking. 4. That is like, you don't ever make that kind of yield on any ETF. And now they could make 4%. That is next level. And so that would be really, really, really cool to see. It doesn't get approved. I don't know. I hope so. But I mean, the thing is, I don't even know if the ETFs will get approved. If we look at the predictions now, since all this happened yesterday, it's gone down to 26% chance. Now, this is just a predictions market that I think is a Web3 specific predictions market that's showing a 26% chance. So this isn't like necessarily experts that are trying to guess this, but it is a free market nonetheless. And so it can be useful. Though I would say, remember, BlackRock is like 581 approvals to 1 disapproval in terms of their ETF applications. And remember, they have an ETF application as well for ETH. So is this going to be their second loss? I don't know. The weird thing is still crickets from the SEC. So we just haven't heard anything yet. That the longer that we don't hear anything, the worse it gets. So I don't know. Hopefully BlackRock does something. We'll see.
All right, let's move on to an update on what's happened with L2s since the Dencun upgrade, which happened last week. We talked about it on the roll-up last week. If you guys listened to that, super, super exciting. We talked about blobs and how this upgrade is scaling Ethereum to new levels. We're 1 week in. So Kai, let's look at where are we actually? Did this upgrade work? What is the scaling impact of this?
Yeah, so if we look at that chart we brought up last week, and you can see that almost all of the L2s are in the pennies or less than a penny to transact on top of an L2 right now. So that's amazing. You can see a pink line up here. We have the chart up of all the top L2s. Linea still has not upgraded to the Denkin upgrade for whatever reason. Seems like a terrible idea. I don't know why they're waiting, but is what it is. And so they're still at like 50 cents a transaction, or like 30 to 40 cents a transaction, I guess, which is just makes no sense now because everyone else is basically under a penny. So I don't know what they're doing, but they need to figure that shit out. Interestingly, though, you look at Base, which was also under a penny, has skyrocketed up to over $1 in fees, $1.50 fees just 2 days ago. We'll talk a little bit about what's going on in the Base world in just a second, but ultimately it has worked for the most part. There's still lots to go. As we just saw, Base is getting a ton of congestion, and unfortunately their fees have gone up from under a penny to over $1. But ultimately, if we look at all the L2s right now, and we look at their transactions per second versus Ethereum, all of the L2s combined in one are now 10x the throughput of Ethereum. So we have scaled Ethereum to 10x just so far. And remember, this was the first upgrade to really do this. And there's plenty of more to go, plus plenty of more L2s to go. Plus, like, not all the L2s are out of like inventory yet. There's still plenty of block space available on these L2s. So we're already 10x, which is pretty cool to see. So Ethereum is essentially processing close to 150 transactions per second currently. And we were at all-time highs. 144, I guess, is what is at all-time highs. So really, really cool to see that. I would imagine that just continues to go up and up and up as we go here. But back to the Base world, since the upgrade happened and it was like a penny, a bunch of people that were on Solana, where it's obviously very cheap there, jumped ship and went over to Base. And Base also has some meme coin stuff going on, and they have a bunch of apps that people go screw around with and whatever. And out of nowhere, Base just went nuts. And if you scroll down, you can see that their fees went parabolic. I guess the base fee was actually up to $4 at one point, which is just nuts. And this all happened within about 24 hours. And again, just a bunch of degens and speculators coming in and playing around with meme coins. Unfortunately, what that ended up happening is Coinbase had to put out a warning on their app saying, hey, the Base network is congested. Transactions are going to probably have failures. So like, we didn't achieve the scalability we necessarily wanted. And so I bet you a bunch of those degens went back to Solana. We're like, all right, let's keep doing whatever we do over there. But what was crazy is Base went from under 200,000, close to like 120,000 users on a weekly basis to over 800,000 just in the last couple of days. So they basically like close to 8x their user base in like 24 hours. Unfortunately, they need to make some adjustments and continue to improve because the gas fees did not remain low. But this is what we need. We need stress tests. We need these kind of things to keep making improvements. And Jesse from Coinbase came out and said, hey, we still got a lot of work to do. We're working on it. But the data side of things has improved, the fees of the data availability. Now we've got to work on the execution sides. This is where we get to like parallelization and things like that, which will be coming in the next little while. Last thing on the L2s, we've achieved scalability to an extent. We're not perfectly scalable, but we've achieved it, right? There's a picture we have up on screen here of all the L2s. You can see they're all under 1 cent per transaction, or under 10 cents per transaction, I guess, for those that have switched over. And so one of the guys from ZK Sync, one of the more popular L2s, he came out and said, you know, with 4844, we've figured out scalability for the most part. At least we're on the right track. And now it's time to put our undivided attention into decentralization. So the thing with L2s is over the last couple of years, they weren't very scalable and they also aren't very decentralized. So they actually haven't been the greatest solution in the world, right? I would say Solana has done a much better job on both decentralization and scalability because most of the L2s use training wheels. So they're not decentralized sequencers. And I won't get into all the technical stuff, but a lot of what they do in terms of how the transactions get executed are actually done in a very centralized way, much more than basically every other L1. But they have a path to getting decentralized. They have a roadmap for it. They just need to build it and it takes time. And a lot of their focus recently was like, well, let's make sure that we can at least be scalable so people will use this in the meantime. So ZK Sync says, okay, our focus is now on fully going decentralization. And then we had an announcement yesterday from Optimism, who obviously has fixed its scalability issue. And now they've come out and said, okay, they've launched their upgrade to become the first open source and permissionless feature-complete fault-proof system in the Ethereum ecosystem. This is like taking the training wheels off their L2 to become fully permissionless and much more decentralized. Now, this is just on the testnet, but it is soon coming to mainnet. And if they execute this in time, like they say, they will be the first one to do this. This is one of those things, they're getting to all the details, where everyone has been waiting for fault proofs in L2s. Without fault proofs, these things are not that great. And so it's kind of been a race on who's going to get there first. And again, everyone had to focus on this recent upgrade, but Optimism is saying, hey, now we're ready. And so very soon, I think we're going to have a race for decentralization of all of these L2s. And so we're going to start to have over the next year or so L2s that are very scalable, less than a penny, and are now fully decentralized or meaningfully decentralized. So this is really, really big. And again, we need this before the BlackRocks and those start to build on L2s. So probably the reason BlackRock doesn't go to base yet, because doesn't have fault proofs. It's not fully decentralized, whereas Ethereum is. But once these things get there, that's when you start to get the adoption of the big institutions. So that's what these L2s are continuing to push for. And that's very exciting news.
What this makes me think of is just our perception of time is so different, whether you're in the space or out of the space. And if you're in the space, especially with new technology, and you can look back at any technological revolution or evolution, such as the internet, it always feels like it's so slow when you're in the space. You're like, hey, we've been talking about this for so long. Why is it taking so long? It's so slow. If you're out of the space, you're like, whoa, that happened really fast, right? But the truth is that technology does take time. So it's very easy for everybody here to be like, well, we've been talking about scaling. We've been talking about decentralization. Why haven't we achieved this? But you got to realize that building a technology that is scalable to hundreds of millions of people and is decentralized to millions or possibly also hundreds of millions of people is an incredibly difficult thing to do. And it is going to take a lot of time. And so we are progressing towards all of these objectives. But I think we need to step back and realize just how difficult a lot of these things are and how it will take time to get there. And we're on the right track.
And this is also why we have these crazy cycles, because people's expectations get so high that, oh, this is going to change the world today. And then it doesn't change the world today because it's not quite ready. And then so prices come all the way back down. And they're like, oh, wait, this is way undervalued now. Oh, wait, the price is going up. Oh, this thing's going to change the world. It's like, oh, no, it didn't do it yet. And it's like we keep going back and forth over years. And so eventually we'll get there, but it takes time.
Well, and also what we are seeing, and we've talked a lot about on today's episode, is the TradFi world and the money revolution that is happening within crypto. And that is in full force in this cycle. You can really see that. It's been in full force in past cycles, but you can really feel like this is the cycle because the Bitcoin ETF got approved. Who knows what happens with the ETH ETF, but there's a lot of tailwinds behind that movement happening in this cycle. The on-chain revolution of bringing identity on-chain and bringing ownership of digital assets on-chain. We're not quite there yet. We all talked about it in the last cycle because of NFTs, but it kind of feels like this, it might not even be, you and I have kind of gone back and forth, Kyle, whether we think that will happen in this cycle or whether
the narrative will come back, but the tech will not be ready. There's no
I don't think so. Yeah,
it's not there yet
either. Yeah. Okay, let's go to Memecoin Mania. There's a new meta within the Memecoin space, and that is Memecoin presales. So let me explain this to you in a simple way. Basically, the way this works is a crypto influencer comes on and says, hey, you send some crypto to this random wallet, and if you deposit into this wallet, then you're going to get huge returns as a reward in an airdrop, because I'm going to take that wallet and I'm going to use that money to invest into a token before the airdrop, which usually gets you a large return, assuming that that token does well after the airdrop. And so a whole bunch of degens love this stuff. I mean, we've seen it before. So many degens giving money to Blast when Blast was just a multi-sig wallet and it wasn't even an L2 yet. There's a lot of trust in this space that maybe doesn't deserve to be there. And so what do you think happens when a whole bunch of people are transferring money to random wallets? Well, rugs are going to happen. Not a surprise. Here I've got a tweet up by Zach XBT, who looked into this, and he found that over $150 million was transferred into 33 different pre-sales in the last, this is only in like the last like week or two. And what do you think happened? Well, a bunch of rugs happened. So he's got a few examples up here of a few different things. There was 7,000 SOL that was sent to one wallet, And then that person secretly took 62% of that and did not fully distribute the tokens. There's another one that was 21 SOL that was sent to a fake Jared ETH address, and they rugs for 440,000. And then another one, and another one, and another one. And so the list goes on.
And it's not even just it's influencers that are going to put your money in a certain project. It's influencers saying, I'm going to launch a meme coin, and if you want in first, send me your money to this random address. And there is nothing to say that they are going to launch this token. Mm-hmm. There's not even a website. There's not anything. And somehow people send $150 million. Like, how could you be so mentally ill to do such a thing? It actually makes no sense. And so hopefully our listeners don't ever do this. This is actually insane. And so, of course, there's going to be tons and tons of rugs. You send someone millions of dollars. What do you think they're going to do? They don't need to launch a token anymore. They got the money, right? Like, how obvious is that? Now, this has happened in every cycle, by the way. This was a clear signal to me. When this started happening last week, I was like, okay, we're definitely hitting a top, because this happened last year or last cycle with NFTs. It happened with ICOs. When people get this like euphoric that they think they can just send money to random people and like they'll make a bunch of money from it.
To X.
Yeah, like it's absolute ridiculousness, and so obvious that a pullback was coming from that.
So there was one funny story that came out of this. I mean, I hate to say this is funny because people losing money isn't funny, but one of these meme coins was Slurf, which is just a hilarious name. I think it's meant to be a sloth. It's a play on the word sloth. So Slurf was a meme coin that came out, and the dev behind Slurf accidentally burned all of the proceeds received in the presale. So they got $10 million in this presale, $10 million deposited into a wallet, and then they accidentally burned it. And he came out, he tweeted, he said, guys, I fucked up. I burned the LP and the tokens that were set aside for the airdrop. Mint Authority is already revoked, so I cannot mint them. There's nothing I can do to fix this. I am so fucking sorry. So you would think Slurf is dead, right? Like, this guy fucked up. He admitted it. He doesn't seem like he was actually trying to rug. It was all burned. You can see that this was burned. He did not steal this or anything. But crypto is crazy. It makes zero sense. So what happened next? Slurf became one of the highest traded tokens in a 24-hour period. It actually passed USDC in a 24-hour period. It traded $3 billion in 24 hours, despite him fucking up and burning the 10 million. So had he not burned those tokens, those people would have gotten a 100x within a few days. But instead, they got zero because all their tokens were burned.
So then you wonder, would that actually have happened if he didn't burn it? So you never know. But anyway,
because just why did this get so much attention? Because he burned this and everybody was talking about it and laughing at him.
Right. Wild. Just a crazy story.
Makes no sense. Okay, let's go to something that did make a lot of sense to me, which is the Starbucks loyalty program on chain called Starbucks Odyssey. Now, unfortunately, as Kyle said earlier in the show, I made this prediction last year that Starbucks would onboard 5 million people on chain. And then I doubled down and made the prediction again this year, because last year Starbucks was still in beta. And I said, you know what? Okay, they didn't get out of beta last year. They're going to get out of beta this year. I believe in on-chain loyalty. And then on Friday, Starbucks broke my heart when they sent out an email and posted in their Discord that the Starbucks Odyssey program is shutting down. And what the heck is going on? So there is two sides to this, because we don't quite know if this means they're shutting the program down for good, or if this means they're shutting down the beta in order to launch a on-chain program within their wider Web 2 loyalty program, which has over 25 million people in it, which was my hope that they would do. So look, let's break down the two possibilities here to see what we think could be going on. First, my belief is that they are shutting down the program for good for now. I don't think this is a forever thing, but I think for now. And the main reason I think that is because I think that what Starbucks learned through this program is that there isn't enough people with wallets and with an understanding of why you need to own loyalty rewards or own loyalty points in the form of an NFT. There's not enough knowledge or understanding of a normie person to say, oh yeah, there's value in me owning my loyalty points. Also, Starbucks got a $4 million grant from Polygon to start the Starbucks Odyssey program. I would bet that funding is done now because they would have put in a ton of effort into this program, ton of staff. They were running a Discord, and their Discord only had about 12,000 people in it. So this was still very small and in beta. So you can imagine a meeting where all the Starbucks people are sitting around and they're saying, okay, great, we've launched this loyalty program on chain. You need to 100x that program this year or we're shutting it down. Because if you don't achieve 100x, then at this level of a public company, they're sitting there saying, well, we might as well put these millions of dollars into our regular loyalty program, where if we get a 0.1% increase in our conversion rate, that has a multi-million dollar impact on our bottom line. And there is no playbook to 100x a loyalty program yet on chain. It just does not exist. We don't know how to do that yet. I think we will figure out how to do that in the future, but we're just not quite there. So I think that that's the realistic side. The optimist take is that they shut this down because they are going to switch over their loyalty program into their Web2 loyalty program, and that might be the next stage. And you can sort of see that. I can see the case for that. So in their email, which they sent out to all their Odyssey program members, they said a few things. They said the journey continues. They said be on the lookout for an exciting new member experience coming your way in April. And they said we are shutting down the beta because we are preparing for what comes next. So those might indicate that there is something coming next, but I am not so optimistic. I believe that they've realized that just NFTs for loyalty, it's too early. I think it makes sense long term, but until we have millions of people with wallets and understanding on-chain activity, I don't think people want it or care about it yet.
I'm more optimistic than you. This was not a thing about wallets. You didn't need a wallet, right? Like you create an account, it was an embedded wallet. So like you don't need anyone with a wallet to do this. Now I get people don't really understand it, but the whole idea was to make it in a way where you don't even know it's Web3. And I do remember last month, maybe it was 2 months ago now, it was when I was in Buenos Aires. It was in January. They opened up the beta program and they put it into the main app for a few countries. Mm-hmm. And I remember looking and we didn't have access, but I know they put it in there. And so I wonder if that was a test to do this for everyone. So I don't know. I'm a little bit more optimistic. If it's not, if they do shut this down, then like Polygon has really struck out because they paid millions and millions of dollars for friggin' everyone to come and play with NFTs on Polygon. And basically all of them have shut down except for like Nike. Although there's also speculation that Nike is going to shut down Artifact as well. Mm-hmm. I don't think they will. They have big plans. They have partnerships with EA Games. Like there's things going on with Nike, I think. So I think that continues with the Air Force Ones and all that. I think that actually does continue. I still think Starbucks continues on this too. The only reason I think it is because Starbucks has the best loyalty program in the world, pretty much, one of the biggest. And so like they care about research and development staying on the forefront. And so I think that they continue this, but I don't know. Let's see what happens. When do we know by? Was it April? I think was the date they
April.
said.
They said in April something to come.
In April.
I think
so we'll learn soon.
I think the thing that we are all learning here is for existing large enterprises to get on chain it's difficult because you have very high cost and very low impact to show right now. And you got to remember the way these large enterprises, public companies work is you got to prove results. Sure, maybe you fit into R&D and maybe that gives you runway, but for how long and how easy is it for a C-suite person to be like, yo, shut that down. That's just costing us money. It's not giving us immediate results. I have other ideas. And that's what happens in these large enterprises.
So with Facebook shut down their thing on Instagram, and it was on Facebook as well. Reddit shut down their tokens. Twitter shut down the profile pictures. So like a lot of institutions are shutting down.
And it doesn't mean that this stuff is never going to happen. It just means that they thought the timing was now, but we're not quite there yet. So I think this stuff is going to happen. I just think we're too early. Now, the one thing that is interesting is that there is loyalty programs that are succeeding on chain, but they're not from large enterprises. They're from small startups. We've talked about Blackbird on the show before, which is a Web3 loyalty program that is built around restaurants. And that is succeeding and growing constantly at quite a good pace right now. But they are a startup. They don't have to prove these large metrics. They have the runway to build something. So I think that's more where we're going to see the Web3 loyalty play out in this cycle, is more from the small businesses. Or the other prediction is later in this cycle, when, same thing as last cycle, when did we see the major enterprises jump in the Web3 world? Sort of towards the top, right? Like, exactly. So maybe we start to see
what it is, Jay? People don't care about loyalty programs. They just want airdrops. That's what everyone wants right now, because that's the real meta. So let's cycle us into airdrops, which most of you, many of you I saw, at least from our Discord, received this airdrop last week that we've been talking about, which is EtherFi. It was dropped on, was it Monday? I think the token came. Anyway, whenever it was, March 18th was when the token dropped. Yeah. It came out at around $4, a little over $4. And then it dropped around the same time as this dip happened. So it obviously went down right after that as well, which is pretty typical. A lot of people on Discord were asking, what do I do? Do I sell it? Do I buy it? I said I was going to hold it, which I did. So it went down to like under $3. So people were getting a little bit scared, but it actually held stronger than like ETH did, and Sol did for that matter, during that dip. And so I was like, definitely holding. I think it's going to go. And it jumped back up to like $4.35. It's now sitting at about $3.80. But many people got hundreds of tokens. So, and many people on our Discord got, hundreds of dollars, thousands of dollars even. I got a few thousand. So pretty cool to see that. They're actually continuing their points program. So if you continue to hold your ETH, they have a second season now. I think it's about 10 weeks long. And as long as you don't sell any of your current ETH, then you jump right into like level 2. And then there's like weekly things you got to do. And if you hold throughout each week, then you grow and you'll get more points. And they're going to drop another, I think it's 5% or so of the allocation, which would be in about 2 months from now. So I'm actually just going to continue to hold my ETH and play on this one as well. I might transfer some over to a different one, but congrats to everyone who got that. That was a pretty cool one. Plus, what's interesting is you also got a bunch of eigenlayer points, and that one has not dropped yet. Now, the next meta, the next one I'm going to, which I've talked about a bit, which is mode. You can bridge to mode we talked about this before. So if you had any activity on any L2s or on Ethereum, there's already points sitting there waiting for you. You just need to bridge. Unfortunately for this one, you'd have to bridge from the ETH L1. So there is some gas fees for that. But once you've done that and you've activated it, you can bridge from any other L2, and it costs you like a penny to move onto this mode L2. And if you hold any assets on it, you earn points. Now, what's really cool about this is there are a couple assets that if you hold, you earn 1.2x so it's like a boost on these points. And by the way, this token's coming in April. So it's a short thing. You just put your money on it now and you're going to get some money come April. So like, go do this. Don't wait. It's an easy one to do. You need a referral. So there is a link in the show notes on getting that if you're not already signed up. But then you can bridge everything from your L2s. If you have any ETH on Optimism, on Arbitrum, on whatever base, you can move it over. You'll get points. But what they also have is one, you can move your ETHFi there, your ETH, which is from the ETHFi one. You can bridge that to there, and you can continue to farm the ETHFi second season while farming this mode one. Or you can buy a new one called Renzo. This is the token is EZETH. This one is basically the same thing as ETHFi. It is a liquid restaking token, and it's fairly new though. And so they also have a points program. So you can swap your ETH on mode. You can also do this on Ethereum, I think Arbitrum, Blast as well as this Renzo. Anyway, I'm doing it on mode because there's a points program for this. It's all done in L2, so the fees cost you nothing to switch over to it, which is super cool. And there's a link in the show notes as well to get to Renzo if you want to learn how to do it. It is a referral code, so that would be great. But this one is really cool because you farm Renzo airdrop, you farm the mode airdrop, and you farm the eigenlayer airdrop all in one, and there's essentially no fees to do it. So it's really cool. The only thing to be aware of is they have not yet launched the ability to withdraw your ETH into ETH. And so that is coming in the next few weeks, they said. I was speaking to them in the Discord. But you can go to Kim Exchange, it's called, and you can swap to there, no problem. So you can get out of it easily. You don't actually have to wait for them to launch this. It already exists on exchanges. So I was waiting for that to really announce this and get a bunch of people to do it. I think now is the time to do it. It's been sort of de-risked. It's now at $1.3 billion almost. Yeah, $1.25 billion in TVL. So it's pretty big at this point. It is still beta, so like don't put everything into it, but I think it'll be the next good one. And plus you can farm 3 all in one, so why not do it? That's it for the airdrop meta.
To agree, disagree, fave segment of the week. Starting off, we got one that's quite a hot take here from Solana Legend. He says, by the time 2024-2025 bull market is over, it will be pretty clear to people that Ethereum is going the way of BlackBerry or MySpace. Solana is Apple.
I disagree with this wholeheartedly. This guy, he has a Mad Lads as his profile picture. His name on Twitter is Solana Legend, and he's got a backpack. So like this guy is a Sol Maxi to the maximum. And I would assume he's just never touched Ethereum or like hasn't used any ETH L2s. It was innovating at a level that basically no one is innovating at. I think both Ethereum and Solana are doing amazing things, building in a brand new space. We have no idea who is the Apple of this yet, but Ethereum is definitely not going the route of BlackBerry, MySpace right now. They are building at such a high level. It's insane for anyone to think that. But obviously this guy he doesn't pay attention to the Ethereum ecosystem. Look, Solana is amazing. I'm not saying Solana is doing anything wrong, but Ethereum is also amazing. If you don't recognize that, then you don't really understand what's going on, which tells me this guy doesn't really get it.
All right, let's go to a slightly more reasonable take on Solana. QW says, Solana is the flag bearer of retail adoption. Ethereum is the flag bearer of institutional adoption.
Yeah, I actually kind of disagree, but I think this is a narrative that will pick up steam this cycle because it's so easy to wrap your head around this. Solana is definitely the place where where degens go. And I don't think that degens represent retail, right? Of course, degens are retail investors for the most part. There are some like traditional finance people that are degens as well, but I think degens are on Solana because it's so cheap and all the meme coins are there. Doesn't necessarily mean retail goes that way. Ethereum, yes, it is getting institutional adoption, especially with BlackRock, as we just talked about. It is the more serious place sort of for this, although that's not even necessarily true. Again, that's more of a narrative than anything. I think both Solana and Ethereum will attract retail and institutions. I don't think it's stuck to one or the other. Now, this is flag bearer, meaning like they're the ones leading the charge. But I would say like Base is probably going to be the one that gets the most retail because it has the most access from Coinbase, right? And you've got Blackbird and all these other apps that will bring retail in that don't even know they're on chain. So like, I don't think this is true, but I think this will be a narrative that picks up and people start to believe that. I think it's also why Solana is doing so well right now is people are thinking it's the retail chain. I've heard people calling that a lot. Like L2, Solana, they're all going to be retail chains. They're all also going to be institutional chains. Everything is going to be moving on chain. So I kind of disagree, but I see the narrative.
Okay, next up, John Wang says, blockchains are cities. Solana is Miami, Base is San Fran, Blast is Vegas, Arbitrum is New York, and BSC is Shanghai.
I absolutely love this. I agree with this wholeheartedly. Blockchains of cities is a wonderful, it could be cities, could be states, could be countries, whatever you want to call it. But what's interesting about it is like they are economic zones, right? That people want real estate on, and they're going to pay to transact in it, and they're going to do it in a currency of that state or country or city, whatever you want to call it. And so like, I completely understand that. When you build your app on top of it, it's like building a store on top of the real estate of a country or a city. And then the example they chose is actually really
pretty
good.
fun.
It's a lot of being Miami, yeah. Base being San Francisco, Blast being Vegas makes so much sense. And BSC Shanghai, yeah, I love this. This is great.
Okay, next up, JPEG, 0xJPEG says, in the next 18 months, either the US bans tokens or crypto is going to make the traditional IPO obsolete. There is no middle ground.
I see his point, but I disagree. I disagree in the time frame for sure. Like, there's no way this decision gets made in the next 18 months. 100% crypto is going to make IPOs obsolete, like without a doubt. Is it going to happen in 18 months? 0% chance. But will it make it obsolete at some point? Yes, absolutely. It is a way better way to facilitate capital and move capital around globally. So like without a doubt, it's so much cheaper for the company that's actually trying to IPO, so much easier for everyone around the world to get involved. So like without a doubt that happens, but I don't think there's no middle ground. I think that's where I disagree. Like the US isn't going to ban tokens in the next 18 months, and it's also not going to make IPOs obsolete. Neither of those are going to happen. I guess I disagree completely. And I think they won't ban tokens because, one, they can't. They can try to ban things, just like they try to ban drugs, and they try to ban, like, I mean, a better one that makes more sense here is like, if you remember Napster and LimeWire when we were like, everyone was pirating music, they tried to ban that, and they would like I remember when you'd go to download a song on, I think it was LimeWire, because Napster was already sort of shut down through lawsuits. They would have these like warnings that saying like, oh, people have had these like crazy lawsuits, and you'd have to pay this much in a fine and blah, blah, blah. And I was like, yeah, good luck. There's 0% chance they're ever going to do it. So I kept downloading music, and everyone did. And we still download music today and download movies and stream legally. And there's just nothing they can really do about it on the internet. They can ban things physically, although they still can't really do that, like the example of drugs. But like, it's a lot more easy to control things that are like a physical business or a physical product. But in the digital world, especially one that's like in a decentralized world, you can't do much. Even though like they've slowed down the airdrops and stuff, and that's not banning just out of fear. You can just throw on a VPN, and a lot of times you can get around the airdrop things. Not always. There are obviously ones that can block that, but like, I don't think that they ban tokens. It just doesn't make any sense. I
mean, the same thing happened with Uber and Airbnb initially.
Those are
a lot of governments tried to ban it, and this is what happens. You start with a very reactive stance of we're going to ban it, and then you move towards regulation because you realize that you can't control it when it's digital, so you regulate it.
And if it's something that people want, there's just nothing they can do about it, right? Like Uber and Airbnb made it because people are like, this is so much freaking better than what exists. I'm going to use this no matter what. And so like, you know, when you get in Ubers in banned cities, you got to like sit in the front of the car, and like people would just do that. They're like, yeah, I want an Uber so bad that like, I'll break the law and I'll sit in front of the car to pretend I'm this.
And same with the drivers. You know? The drivers wanted it so badly that they were willing to break the law, and they're the ones taking the risk, really.
Exactly. Airbnb, same thing. Like, yeah, I won't tell the concierge at the apartment I'm going into in New York or in Toronto because I want to use Airbnb. And so like people just go around it, and then eventually people are like, shit, everyone's doing it anyway. There's nothing I can do about it, right? So the same thing's going to happen here with crypto in the US, although I don't even think it gets to that point, to be honest.
Okay, last one of the week. What Solana ecosystem is experiencing now is extremely similar to what Ethereum went through during the 2017 ICO bubble. There is massive demand for Sol to speculate on a new asset issuance on Solana. Study Ethereum ICO bubble during 2017-2018.
Yeah, I mean, I agree completely about this. It's also happened in 2020-2021 for ETH with NFTs, right? Whatever the thing is that people want to play around with and speculate on, if there's a token that's needed to do that thing, right? So in Solana, if you want to trade meme coins and stuff, you need Solana for gas, right? And if you want to trade NFTs on Solana, it's priced in Solana, number one, and you need Solana for gas to do it. The NFTs in 2020-2021, same thing. You needed ETH for gas. Same with the ICOs, you needed ETH. And so when things are priced in that and you actually need it, that is real utility. And it means that token is going to go absolutely ballistic. Did it in 2017, ETH went nuts. ETH went nuts in 2021 when NFTs were going crazy. Solana's doing it now with meme coins, and this will continue throughout the cycle. So this is why I think ETH and Sol are such important assets, and why I'm so bullish on them. It's because no matter what else succeeds and gets hype this cycle, you still need those two assets to do any of those things. And that's why no matter what happens, ETH and Sol will do well. It does not matter what narrative, what app, what NFT, what project, it does not matter which one succeeds. As long as one succeeds, ETH, as long as it's on Solana or ETH, those tokens succeed, right? That's what I've been trying to explain to people through the whole bear market is like, don't try to guess which one's going to work out, right? No one a year ago was like, meme coins are going to be the thing, right? I mean, some people were, of course, because they always are, but like no one knew it was going to be Joe freaking whatever, Bogan or whatever. But all you had to do was just buy Sol, and it worked out. And so, yeah, I completely agree with this. This is the play of blockchains, without a doubt.
That's a wrap on another week and another episode of the weekly roll-up. Thanks so much, everybody, for listening in. We hope you are feeling a little bit safer, a little bit more confident in your investments and in your place in this rapidly changing on-chain world. If you need any more help, if you got any questions after the show, make a comment on YouTube or jump into our Discord. We're here to help you through your journey on-chain. Always here to support you. Kai, thanks as always. Have a great weekend, everybody.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.